What if you could literally rewrite the code of life to cure a disease? For a little while, that was the incredible promise of a company called Intellia Therapeutics. I mean, it was a Wall Street darling, the absolute embodiment of biotech's world-changing potential. But this is the story of what happens when that incredible dream collides with a pretty brutal reality. So let's just start with the number that really defines this whole story: 45%. Just imagine for a second waking up to find that the company you believed in, the one that was poised to change medicine forever, had its value cut by nearly half in a single day. Yep, this is the story of that number and how a beacon of innovation became a biotech cautionary tale. To really understand the fall, you first have to get your head around the breathtaking ambition behind the rise. We're talking about the dream of gene editing, a technology that promised to fix diseases at their very source. Okay, so the core technology that made all of this seem possible is called CRISPR/Cas9. The simplest way to think about it is like a pair of molecular scissors. It can go into our DNA, find a specific faulty gene, make a super precise cut, and then allow for a correction. I mean, this wasn't just some new drug. It was a whole new way of thinking about medicine. So with this incredible tool, this was Intellia's mission. They were trying to create one-time cures for these just devastating genetic diseases like ATTR, where these misfolded proteins build up and literally destroy a person's organs. And their goal is to deliver this cure directly inside the human body, a really groundbreaking approach called in vivo gene editing. With a mission that bold, you can imagine the excitement was just, well, it was electric. And for a few years, that excitement translated into one of the most incredible stock market runs in the entire biotech world. So let's take a look at how they climbed that peak. This quote right here really says it all. In the minds of so many investors, Intellia wasn't just another promising company. No way. It was the next Moderna. Think about that. A revolutionary force that could transform medicine and deliver these just astronomical returns, exactly like Moderna had done. The hype was absolutely immense. And that hype, it was being fueled by real scientific progress. In 2021, we got this historic moment. Intellia published the first ever data showing they had successfully edited genes inside a living human being. Incredible. Then, through 2022 and 2023, more data kept coming out suggesting it was safe. And by 2024, they were ready for the final step, these massive phase 3 trials. And this chart, well, it just shows that investor euphoria perfectly, doesn't it? From 2020 to its peak in mid-2021, the stock went up over 700%. It rocketed past $175 a share. We're talking billions of dollars pouring in, all betting that Intellia was right on the verge of making history. But this is where our story takes a very, very sharp turn. Because, the elegant promise of science is one thing. The messy, unpredictable, and often really unforgiving reality of testing that science on actual human beings, well, that's something else entirely. And that brings us to late 2025. This is the moment the dream came crashing down, leading to an overnight collapse, from darling to disaster. Just try to imagine seeing this headline flash across your screen. In an instant, the entire narrative just shattered. The company had paused dosing in its most important trial, the one everything was riding on, all because of a serious liver injury in one of the patients. The market's reaction was, you guessed it, immediate and absolutely ruthless. And the speed of this crisis was just stunning. This wasn't a slow decline, not at all. On October 27th, the company pauses. Just 2 days later, the FDA steps in and puts the whole thing on a full clinical hold. Then, in early November, the worst possible news came out. The patient had tragically passed away. And this shows the brutal result of that catastrophic chain of events. The stock, which had once been flying high above $175, just plummeted. It fell below $35 a share, its lowest point in over 4 years. Billions of dollars in value, gone, in just a matter of days.
So we know what happened, but to really learn anything from this, we have to understand why. Why was the reaction so severe? So let's break down the anatomy of this crash.
See, the really crucial thing to get here is that this collapse wasn't just about one tragic event. It was a perfect storm of factors. First, you had a late-stage safety shock. I mean, problems in early trials are kind of expected, but a death in a phase 3 trial?
That's a nightmare scenario. Second, that FDA clinical hold just freezes everything. And third, and this is probably the most important part, was this idea of platform risk. Investors started to worry, what if the problem wasn't with this one drug, but with Intellia's entire delivery method?
This just shows you how fast the whole story about the company changed. Before the crisis, everyone celebrated Intellia for its first mover advantage. Afterwards, that same position became first mover risk. The perception shifted from safe and effective to potentially dangerous, almost literally overnight. And of course, the experts on Wall Street reacted just as quickly. As you can see, analysts at huge banks like Barclays and Citi immediately started slashing their ratings. Price targets, which had been averaging around $100, were cut by more than half, falling all the way down to $45. Confidence had just completely evaporated. But this wasn't just about Wall Street analysts. This comment from an online forum, it just perfectly captures the shock and the fear that everyday investors were feeling. It's such a stark reminder of the unique risks in this sector, where years and years of progress can be wiped out by a single devastating headline. So what can we take away from this whole dramatic story? Let's try to distill it down into some key lessons for, navigating the high-stakes, high-reward world of biotech investing. All right, think of this as a kind of investor's survival guide. The key here is all about managing risk. First, position sizing. Seriously, never bet the farm on one early-stage biotech. I don't care how promising it seems. Second, you have to diversify beyond just one sector. And finally, and this is maybe the most important one, you have to learn to separate the scientific hype from the really, really difficult reality of clinical development. Ultimately, this whole saga, it really boils down to a single, powerful truth. Investing in the space, it rewards vision, for sure, but it absolutely punishes impatience. Biology just does not operate on an investor's timeline. And that leaves us with this final thought. Intellia was chasing a dream, a huge dream, the dream of a cure. And for that, it was rewarded with a massive valuation. But its story forces all of us to ask a really difficult question. In the world of high-stakes innovation, what is the right price to pay for a dream?